Doing the next sum of incomplete records, it's of May, June 20, paper 22. Okay. Can you read the sum, please?
Tariq owns a retail business but does not maintain full accounting records. All goods are purchased on credit, but all sales are on cash basis.
How do you know
Tariq
this
provided
is incomplete record sum?
he does not maintain full accounting records.
Okay, he does
So
not
you know
maintain
it's illegal.
full accounting records. Okay. Now, what
Hmm.
is the year end of yours?
30th September 2019.
Okay, your year end is 30th of September. Okay, move on. What do they want you to calculate?
The credit purchases for the year ended.
So if they want you to calculate the credit purchases, so in incomplete records, if you want to find out credit purchases, what do you make?
The PLC.
The PLC account. Can we make the PLC account?
Yeah.
You see, it is for 4 marks. So look at the weightage of the marks before giving any detailing. Okay. So credit purchases. Making the credit purchases, I will make the PLC account, or we could also say it's a trade payable account.
Hmm.
It always has what balance?
Credit balance.
Credit balance. So opening balance on the same side. So if you see, they've given you your opening trade payables, and they've also
Yeah.
given you your closing trade payables.
Closing.
So what is your closing trade payables?
Closing is 7,220 and opening is 4,980.
You have balance begin down and you have the balance close down.
Then there is payments to trade payables, which you'll put on the debit side as bank, 70,300.
Then,
Then discount,
then what you said?
discount received on the debit side.
So you will find your credit purchases as balancing figure.
Yeah.
Okay. So tell me, the debit total is how much?
Debit total is 1 sec. It's 78,460.
Okay, so from the 78,460, when you subtract 4,980,
Yeah,
you get
4,980.
purchases. How much is your credit purchases?
It's 73,480.
Okay, fine. So whenever they ask you the question, anything above it will be the information related to that question.
Hmm.
Okay. Now you have additional information before going through anything. Just see what do they want you to calculate in the B part.
Calculate the depreciation of furniture and equipment for the year ended 30th September 2019.
So when they want you to calculate depreciation of furniture, what will
Hmm.
I do is I will see all the information that is related to furniture given to you.
Yeah.
So I have this information that is related to furniture.
Hmm.
This is the opening and this is the closing.
Yeah.
Okay, fine. What else is related to furniture?
Um, Nothing else. New furniture. They've not given the depreciation amount.
So when you have to calculate depreciation and they give you an opening and closing valuation, so you do opening plus purchases minus closing minus sold. Do you do
Hmm.
that?
Yeah.
Your opening valuation of furniture,
28,300.
purchases is
5,200.
28,300 is the closing value. Please see the dates properly.
Yeah, 26,800 is the opening.
Purchases is 5,200. What is the closing?
28,300.
So what would be your depreciation? 3,700.
Yeah, 3,700.
So this is your depreciation on your furniture. Now they want you to calculate the cash drawings. What do they want
Hmm.
you to calculate? Cash drawings.
Yeah.
Now, whenever they ask you something to calculate, you have to see everything that is on the top to come
Hmm.
at the conclusion which is there down. So if they want us to calculate cash drawings, I will try to see information that is related to cash and bank. Okay. Here all
Hmm.
the goods are purchased on credit, but the sales are always done on what basis?
Uh, Cash basis.
Sales are done on cash basis. They want our cash drawings. So I see things that is related to cash. Will I or won't
Hmm.
I?
Yeah, you will.
So because they want cash drawings, I will see things that is related to cash. So I have closing cash balance and I have the opening cash balance.
Yeah.
Okay. Apart from that, I have this cash taking bank. What does this mean?
Where?
Here.
Oh, cash bookings banked. Yeah.
What does
It's
this
a
mean?
it's a contra entry, na? So whatever amount was
Have
received
they
in
told
cash, they
you,
put it in the bank.
have they told you that you have done all the sales on cash basis?
Yeah.
Okay. So that means you have done all sales at whatever sales you have done, this is done on cash basis.
Hmm.
So after you did the sales, you received money.
Yeah.
So what money that you receive, can I say this is your cash takings?
Yeah. So this will be sales.
And this cash takings, what did you do? You put it in the bank.
Yeah.
So this is all the sales that you have made and that is put in bank.
Hmm.
Okay.
Yeah.
Apart from that, you see there is some drawings of 225, 150, but I don't know what type of drawings it is.
Hmm.
Anything else that is related to drawings?
Yeah. The entry down. It says
Okay,
that
so they want us
Tariq
to
took good.
calculate cash drawings.
Yeah.
That means
So
they
Miss,
want us to calculate the cash that is withdrawn from business as drawings. Yeah.
yeah.
They want us to calculate the cash that is withdrawn from business as drawings. So can I make a cash account to find out cash drawings?
Wait, you can also make the drawings account, no?
Do you have any drawings account? If we want to
No,
find out
no.
how much cash is going out, we want to find out how much cash is going out as drawings. This is what we want to find out, right?
Okay. Yeah.
So I have the opening balance of cash and I have the closing balance of cash.
Hmm.
What was my opening balance of cash?
There are both cash at hand and cash in bank.
Cash at bank would be opening balance of the bank,
Bank, yeah. Okay, so you'll do cash in hand over there. So four will be 820 as the opening balance.
and closing balance.
410.
So opening balance is 820 and closing balance is 410. Yes?
Yeah.
Okay. Apart from that, what did it tell us? Cash takings banked.
Yeah, so you'll put that on the credit side of this account because it's going out of the cash account.
Yeah. So cash banked. How much?
1,12,400.
Then they say you have cash sale. That means money is coming in.
So that will be on the debit side.
Then they say you have paid wages.
So that will come on the credit side.
What is the total of your debit? 134 020.
020, yeah.
So you will know your drawings as your balancing figure. 134,020 minus 112,400 less 18,800 less 410. Yeah.
Yeah.
What is your drawings? This cash drawings.
You do 134,020 minus 410
Yeah.
minus
So
1,800.
what is the amount that you're getting? Are you
Yeah, one
getting
sec.
410?
Yeah, 2410.
Now I have to prepare income statement. I'm preparing the income statement over here only, okay?
Hmm.
Okay. I'll read the question again. All purchases are made on credit. All sales are on cash. Yeah.
Yeah.
This is the information about receipts and payments. I will see what information I want to put in my income statement. In my income statement, I will record all the revenue receipts as income and revenue expenses as other expenses.
Hmm.
Can I say the rent of premises is another expense? Because when I'm seeing the receipts, this is no relation, this is no relation. Payment to trade payables is nothing to do.
Hmm.
Rent of premises.
Yeah, that will come in the other expenses.
For furniture, what will come?
Depreciation.
Depreciation of furniture will come as other expenses.
Yeah.
Then
Then after that,
fee,
accountant's fees, loan interest. And
account
then
fee and loan interest. Okay.
And then you'll
Goods
minus the two
for
drawings now that you found.
goods for own use.
Yeah, 390
It will be subtracted from purchases.
purchases. Yeah.
Okay. Is there any discount received also over here?
Yeah, 940.
This is what?
This is going to be other income.
Other income. Okay, fine. Now look over here. This is the last year and this is the current year. See if you have any adjustments related to outstanding or prepaid. This is opening inventory.
Hmm.
This is closing inventory.
Yeah, rent prepaid as well.
Okay, this is prepaid of the last year.
Last year. Prepaid of the last year means that you'll add it to this year.
Yeah, so current year prepaid, you subtract, and last year prepaid, you will add.
Add, yeah.
So
And then
9
there's other payments.
will be added to rent. Yeah,
Hmm.
yes.
10, yeah, 1040 will be added. Yeah.
Outstanding of the current year.
Current year, it's outstanding of the current year, so you'll add it.
You will add it. Okay, fine. They've directly given you cash sales. They've directly given you cash sales.
Yeah, they've given it to us now.
This wages
Yeah,
of assistant
133200.
and this wages of assistant 18,800. That would also be other
Yeah,
expenses.
yeah.
Okay, can I make income statement? I'm making income statement over here.
Hmm.
So if I'm making income statement, first thing that I will have is revenue less cost of sales, right? What is my revenue? 133,
133.
200. Cost of sales.
You put the opening inventory,
Hmm.
which is 7,410. You'll add the purchases to that, which is given. Purchases we calculated, no? 73840.
480.
Hmm.
In the purchases, you will do adjustment for
You will minus the drawings from it.
goods for own use,
Yeah.
390. So what is your net amount of purchases?
73000.
So opening inventory and purchases, what is the amount that you're getting?
80,500.
From that 80,500, what will you subtract?
Closing inventory. 8080. Which is 72420.
So 72,420 is your cost of sales.
Yeah.
Revenue minus cost of sales will give you
60780.
gross profit. Then
And you'll add the other incomes.
what is other income?
No discount allowed.
Allowed.
Discount received. Received.
There is only one thing. Can I directly put it on the outer column?
Yeah.
How much?
Discount received is 940.
So what is the total amount that you're getting?
61720.
less other expenses. What are your other expenses?
Other expenses were first. Here is,
Rent of premises.
yeah, rent, to which you will add 990.
Yeah. Add 990, add 1040. We already adjusted for prepaids and outstanding, okay?
Hmm.
So it is 14,930
Plus 990.
So it is 14,930 plus 990 plus
A second.
1040.
Where is 1040?
Outstanding rent of the current year.
Oh yeah, outstanding rent is actually. Okay.
So what is that amount coming up to?
16,960.
Hmm. Then after that,
You'll do the depreciation amount that we found.
we will see that receipts and payment, right?
Yeah,
Accountant fee,
yeah, accountant fee is 640.
yeah. Then there is loan interest, 580.
Yeah,
Then there was depreciation,
depreciation is 3,700.
then what else was there? Wages of assistant.
Hmm. 18,800.
What is the total amount that you're getting?
40,680.
Then you will write this is what
The other expenses.
for the year. How much is profit for the year?
21,040.
21,040. So you made the income statement. You made the income statement. Yes.
Yeah.
Now the next part, the E part. What is question E? You have to explain the business entity.
Um,
I don't have the E question with me. Do you have it in the book?
no, I'm not doing this on the book. I'm doing it in the iPad from the PPT.
Okay, fine.
But
Then,
I'll check it.
no, it's fine. Look at the question number F.
Yeah.
Can you read that?
Tariq has become concerned about his business liquidity. He is considering two options. Option one, reduce inventory levels. Option two, delay payments to suppliers. Advise Tariq which of these actions he should take. Justify your advice.
Tell me what does this mean?
So you're going to give advantages of the first one, then disadvantage, then same for the second one.
He's concerned about liquidity.
Yeah.
And to improve that, he wants to reduce inventory level.
Hmm.
So if he is going to reduce the inventory level, what is the advantages and disadvantages of reducing the inventory level, right?
Yeah.
Okay. So if he is reducing inventory level, what could be the advantages and what could be the disadvantages for option one?
So you write one advantage, one disadvantage, right?
Yeah. Let's see how many marks. 5 marks. So for
Hmm.
option one, you will write one advantage and one disadvantage of reducing inventory level.
Hmm.
For option two, you will write one advantage and one disadvantage of delaying payment to your suppliers.
Hmm.
Right? Come on,
Yeah.
let's see. If I reduce inventory level, what will happen?
If you reduce inventory level, first your storage cost will decrease because you don't have to store the inventory that you've called for.
Yeah, and what is the disadvantage?
Then disadvantage will be that in case anyone needs like the product then and there, you won't be able to give it because you don't have the inventory. So you may lose out on customers.
Okay, fine. What is the second option that they have for you?
Second option is delay payments to suppliers.
So if you're delaying payment to supplier, what is the advantage?
Advantage will be that first your liquidity would increase because now you have cash with you.
Okay. And what is the
Then
disadvantage?
it may cause it may make your reputation bad with your supplier and they may not want to supply you. Like it'll have a negative impact on them.
What is your advice?
I think that Tariq should reduce the inventory levels because even if the product becomes obsolete, this way he doesn't have extra inventory, and this can help him in the future, and it will help improve the invent his liquidity problems.
Okay, very well. Okay. Now, can you explain me about the business entity concept?
Business entity concept is when the business should have a separate legal identity from its owner, right?
Okay. And
And
business has its existence separate from the owners. They are asking you to explain the accounting concept. Okay.
okay, so basically transactions that happen like regarding the owner shouldn't be recorded in the business's financial documents. For example, if the owner buys a car, that's not supposed to be recorded in our income statement.
2 marks.
Hmm?
Only for 2 marks.
So you'll say that the business should have a separate legal identity from its owner. Any transactions that affect the business should be recorded in their own accounting records.
Should not be recorded in business. You only want to talk about business.
Yeah.
The accounting concept of substance over form.
Yes, I don't remember. Wait.
Substance over form is that if any material thing has already happened, you will record the material thing irrespective of the fact the paperwork is not completed. That means the economic impact is taken into account and legal form is disregarded. Just understand. Say, for example, I have taken a furniture, or I could say I have taken a plant and machinery. I have purchased a plant and machinery, but I have neither made the payment for the plant and machinery, I neither received any bill to buy the plant and machinery, but the plant and machinery is there in my factory and I am using it.
Hmm.
So economic impact is that I have a non-current asset and I should charge depreciation.
Yeah.
Okay, this is the economic impact of having that plant and machinery in my factory.
Hmm.
But the legal form is disregarded. There is no documentation that has been exchanged, no money has been exchanged.
Hmm.
So, what should I do? Should I treat it as my plant and machinery or no?
You will treat it as your plant and
So,
machinery.
substance over form tells you that if any transaction has taken place, so your financial statement must give a complete and accurate picture of the event.
Hmm.
What does substance over form say? That your
That
financial statements, yeah, can you tell me?
that your financial statement must give a complete and accurate picture of the events, so economic impact is taken into account and legal form is disregarded.
Again, can you tell me substance over?
Financial, yeah, financial statements must be given a complete, accurate picture of events, so economic impact is taken into account and legal forms are disregarded.
Again,
Financial statements must give a complete and accurate picture of events, so economic impact is taken into account and legal form is disregarded.